Green bonds have evolved from a rarity a few years ago to a key element in a bank's debt capital markets offering. In this next chapter, we are in Hong Kong and London to speak to HSBC's global co-heads of DCM, Alexi Chan and Jean-Marc Mercier, to hear about the growth of the market and its outlook. Alexi, the green bond market has come a long way from the first issuers, which were very green issuers. Now we've seen others too. Well, if we look at Asia in particular, how would you say has the green bond market developed in the last 5-10 years?
Well, the statistics are quite striking, really, and we've seen an acceleration in the last couple of years. So if we look at 2016, global issuance got close to $100 billion in total, and Asia accounted for about 1/3 of that, so more than $30 billion of issuance. So pretty significant. The largest jurisdiction by quite a long way in the region has been China, and the authorities in China, the regulators, have taken significant steps to develop a green bond market onshore, as well as encourage offshore issuance. And that has been perhaps the most significant development that we've seen in the region.
It started in a way in Europe, and now Asia is all over that. Europe obviously continued to be the main issuer, but China is very active, and now LATAM has really gone into that as well. So it's really a global proposition, a global development, which is fantastic to see.
And you're obviously one of the co-heads of global DCM. How much of a share does sustainable finance now take of your DCM business?
Never enough. We want to do more. Look, all our clients are looking at this. Some of them have done one, some of them are looking at one. I think really 5 years ago it was seen as niche. And I think across the discussions on incentive, the impact on maybe RWA, so that's really a big story for the banks. Whether it's for corporates, do I want to change my DNA? Whether it's for countries, how to really respect what you signed in the COP21. And really across every institutions, green bonds and social bonds are a way to change the information system or even the DNA of the institution. And we have seen that time and time again. That's the feedback we get from our issuers, that the change has been incredible. From not interested to we've done one and the whole firm is now on the case.
Are there any perceived misconceptions still from some issuers who might think that maybe pricing is going to be different in a green bond than a normal plain vanilla bond?
I think the understanding of the product and what it takes to issue a green bond has increased significantly. And most of our clients are accepting of the fact that there will be an extra commitment and some extra effort and pulling together various parts of their organizations, as well as some relatively modest incremental costs associated with issuing particularly the debut green bond.
We now see pricing advantage on green bonds and social bonds. We've seen recently several examples of a few basis points, but actually in percentage, quite a chunky 10 to 20% of inside the curve results. So now issuers are starting to see the value, if you will, of your efforts to really get price down, which makes huge sense when you think that, well, if you hear the Basel Committee and the financial disclosure or the climate disclosure, you start hearing that, well, you should have a bit less risk on those elements of the market. So price-wise, you should see that it's a bit more expensive, a bit inside the normal curve. So that's a very exciting development for issuers.
If we talk about the benefits of issuing a green bond, how much of a benefit is it from the investor side, as in bringing additional investors to the table?
Well, we're seeing more and more investors who are setting up dedicated green bond portfolios. And in this part of the world, that could either be from Asian money or mandates from elsewhere to invest in green bonds. The other area I think that's very much of significance in the Asia-Pacific region is in relation to the onshore renminbi market. And we've recently had the announcement of a scheme called Bond Connect, which will enable international investors to get access to the onshore market more easily.
There's been a lot of discussion from some investors who weren't too happy about, the idea that some issuers might,
be issuing green bonds, but they're kind of using them to greenwash their business. Now, how difficult is it to balance sustainable finance with issues like this?
No, it's a good point. It's a good question, and I think the whole market is very much focused on this. I think most of the issuers really want respect, and the investors and the rapport you have day in, day out, if you will, with your stakeholders makes a good check for any greenwashing. And I think we had that criticism maybe a few years ago. I've not really heard much of that recently.
We are seeing greater harmonisation and consistency amongst various green bond principles or green bond guidelines in jurisdictions that enable investors to have a clear view that what they're investing in is indeed a green bond. An increasing number of our clients are issuing green bonds with a specific green bond framework. We need to be realistic that not all companies and indeed not all economies will be able to make the move to a zero emission businesses instantaneously, and the role of the capital market is in part to help guide companies and clients towards the right forms of investment. And I think the development of the green bond market is a very, very important change that we've seen, which can help funnel capital into areas that are consistent with this global agenda for tackling climate change.